Good afternoon, traders. This is Christian from Hertz Tribeca Trade Group with your video on the next sectors to fall. Okay, so S&P. Let's look at a chart quickly of the S&P, and a lot of talk going on about a possible head and shoulders pattern forming here. We just traded below value here on the daily chart. It's looking pretty weak. However, don't see a lot of major volatility going on here. However, we are seeing a lot of interesting trades go up and a lot of areas to watch that I think have more volatility that could be coming here. So, what's been happening in the last couple of weeks? Well, we've started to see a couple sectors break down. First one that we saw break down, some of this had to do with obviously Apple, which is the biggest weight in the XLK ETF. But take a look at this, much weaker looking chart than S&P, and then this week, the semis group broke down quite a bit. That is showing some red flags. And then obviously what happened with retail this week. Retail really got smoked this week. This was one of the stronger sectors that recovered back in February, going all the way up to April. So we saw some volatility that happened a few weeks ago. A lot of put buyers came back in. We rolled back up, and with earnings this week from Macy's, Gap, Nordstrom's, Dillard's, all falling to the downside here, and really seeing a waterfall right now in retail. So what else is next? What could turn down here? So two areas that I'm watching, two sectors that I'm watching, are industrials and financials. So let's talk about the industrial sector first and why I shorted the industrials on Friday. Number one, so the biggest catalyst I see right now, the US dollar gaining some traction here. So very interesting. If we go to the weekly chart, the US dollar has been in this sideways pattern for the better part of a year after a big run up. Trying to figure out what we're going to do next in the US dollar. We briefly broke support here and we bounced right back, kind of like jumping on a trampoline. So you see a nice hammer bar developing here, and we are now trading back into the value area, which is positive for the US dollar. Whether we maintain this level, something to keep an eye on. Let's go to the daily chart in the US dollar futures. Two areas to watch. Let me just bring this back to the weekly chart for a minute. First of all, support level. I would watch, the support level that I'm watching is 94.38. Again, that's 94.38 in the US dollar futures. If you go to the daily chart, the resistance that I'm watching is this red line, which is 94.84. So why this is important, why there's a lot of implications here, is because the US dollar affects so many different things. Multinational companies, for one thing, and where I'm turning my focus to is the industrial sectors. The industrials become very challenged once you have a stronger dollar. If we continue to rally here and get above this resistance, I think the industrials could be the next sector to fall. So if you look at the industrials ETF, that's XLI. You could see that we just broke value on the daily chart. I did short this midday yesterday. Already hit two profit targets because there was a lot of volatility that happened at the end of the day on Friday in the marketplace. So I was able to take some of the trade off. I'm going to be holding for a further breakdown. What this chart tells me is a lot of weakness. I see, all along in this trend, the exponential moving averages that I have on my chart, the yellow line has managed to stay above the blue. We now see the yellow line falling below the blue. That is a sell signal on my charts. We're also seeing a lot of put buying that happened towards the end of the week. EMR, which is an industrial name, 5,052.5 puts. That's an opening trade. So opening put buying there going out to June. We also saw this in a couple other places. CMI. June 110 calls, about the same amount of contracts that traded. These are the 110 puts happening that traded on Friday. Also saw a pickup in put buying in GE. We saw put buying in Caterpillar earlier in the week. Also saw another 5,000 share block of PNR. So this is all industrial trades that happened on Friday. So we're starting to see, not only this happen in the technicals, but also in option activity. So I'm going to stay short industrials. And if what would compel me to unwind that trade is if the US dollar starts to sell off. The next sector that I'm watching is financials. Same things. We saw a lot of activity that happened in the financial space on Friday. Pretty big, interesting put action that that happened in the XLF ETF. 151,000 contracts that traded on Friday. These are the June 22 puts. Notice they chose the quarterly, not the monthly contracts. Why may they may have done that because the Fed meeting happens, later in June. So if they would have just picked the monthly contract, that would have not caught the Fed meeting. So, first of all, what are Fed futures implying for the next Fed meeting that's happening in June? You could look at where Fed fund futures are pricing. Not much of anything are they implying for June. Very little pickup in terms of volatility in Fed fund futures. They're not implying a 10 basis point move until we get to October. So pretty far away, and it's not even 25 bips. It's only a 10 bip move that Fed fund futures are implying from current levels. You could also look at this in terms of what the probability of a rate hike is in June. Very low right now, a 4% probability. That is also what Fed fund futures are implying, 4% probability of an interest rate happening in the June 15th meeting. So again, this contracts that they did in XLF are quarterly, so they are, this is the end of the month, so they are picking up this meeting. What else do we see in terms of financials, which were interesting? I like this even more than the XLF trade. They bought puts in KRE, the regional banking ETF, and really far away, as well as far down in strike, 30 strike. Why I think this is interesting is if you look at the chart in the regional banking ETF, it's been in a slight upward trend, kind of one of the last soldiers to advance in terms of the rally that we've seen from February on. However, they are showing some signs of cracking here. We get a close below this trend line, and we may have some, if we continue below this trend line, we could have some more downside ahead. Again, notice the price, $38. Someone is picking up the 30 strike, so all the way below the February low. Someone is thinking that we could have a lot of downside to go in the banking sector. Again, the catalyst, possibly no rate hike. And take a look at what TLT is doing. When do banks do well? When interest rates start to move higher. This is the opposite of the current environment right now. TLT, which is the long bond ETF, we're seeing prices rise in treasuries, meaning interest rates are going down. That is not good for financials, not good for the banks. So if this continues, if this trend continues, if we happen to take out the April high, that is not going to be good for banks. So that's the major catalyst that I see in financials. The bonds are rallying, interest rates are going down, not good for banks. Turning back to industrials, also the catalyst there is the US dollar going up, and not so good for those particular companies. And that's being backed further, and further enforcing my view is all the put activity that we've been seeing in these two sectors. So that is why I have gone short industrials. Also, we'll be looking at going short financials going into next week. Keep in mind that you have plenty of opportunities to put on the trade in financials. Markets don't go straight down. We did see some weakness on Friday, but wouldn't be surprised if we see a little bit of a move back at some point next week. So have a great weekend, and thank you for watching the video, and good luck trading next week.